Hello, investors. Let's talk a little bit about Alibaba, a very, very interesting stock actually, that seems to have gone down quite a lot actually the past few months. And I remember at some point it used to be near, actually more than 300, which is insane. And it went down to 111 right now, 112. And so it's almost down like 60% basically, which is insane if you think about the business model of Alibaba and the fact that it's kind of a big supplier for Amazon. And so personally, I wouldn't really have expected this kind of drop to have happened. But a lot of things can go astray in the stock market and with specific stock. So even if you're holding this one, you may be interested in examining the financials a little bit, which is what we're going to be doing next. So let's dive into it because, as I mentioned in the previous video, I kind of want to keep this a little bit shorter than I used to, because it probably makes for easier watching for people. Let's take a look at the income statement. Starting from 2018 to 2021, which is data that we have for this stock, and 250, that's billion for 18, 376, 509, 717. Healthy. I mean, it's been growing in terms of revenue, and ideally you want to see even more of a growth even in net income. And we're gonna see that it's like 63, 87, 149, and 150. There hasn't been much drop from 2020 and 2002, much increase, sorry, between 2020 and 21, although there was more profit. So there were some special charges here, some special expenses, I suppose, so that you wouldn't expect those to happen again, I guess. So that's fine. Yeah, the revenue seems to be growing and they're pocketing quite some, so that's nice. Let's take a look at the balance sheet and the current assets, the assets that can be liquidated this year actually in 12 months, in the next 12 months. This is 256 million, 270, 462, and 643 billion, right? So then that's the non-current assets also growing very nicely and reaching a trillion as well. And so the liabilities similarly growing a little bit, which is to be expected when you're accumulating assets. Expenses increase as well. And so the total equity here started from 368 billion back in 2018 and grew to almost a billion here, approaching a billion rather quickly. A trillion, sorry, why am I saying billion? So a trillion, approaching a trillion actually, very, very quickly in terms of their balance sheet. It's nice to see. Cash flow, the most important thing. Cash flow from operating activities from their operations, 125 billion, 150, 180, 231. There has been an increase, actually, an irregular, more than a regular increase from 2020. That's nice to see. And the cash flow from investing activities and financing activities, as usual, take a look at those fields just because they're not there for some reason. And so I take a look at those through Yahoo Finance. And this starts from 2018 here to 2021. Things are expected here, a lot of investing going on, and even more in 2021. That's nice to see. So company has spent a lot in investing. We could potentially take a look at what they bought even, like they have done purchase of investments here. And it could make sense to actually see, yeah, they purchased the business here as well. That's fine. But in some situations, you may want to break down the specific types of purchases that they made. This is equipment. Very, very normal things here. Yep. So you may want to see whether they are investing in themselves, for example, or if they are buying a lot of other companies potentially, and spending trillions or a lot of many billions. So you have to be wary of that. I mean, you at least know about it. So investing looks fine. Financing, you again want to see this in the negative because it means that they repay debt. But their debt position is pretty awesome. I mean, they have almost no debt, so this doesn't really worry me in the list here, and it's pretty balanced as well, so that wouldn't worry me really. They may have sold some stock, as you see here, like common stock issuance, very normal stuff. The company doesn't rely on external stock to to perform well and make money, so that's nice to see. And yeah, the change in cash, again, it's not the most important thing just because it's just the difference of held cash between the different periods of time. And this is affected by investing and financing as well. So I wouldn't pay too much attention to that, but I would pay attention to free cash flow, of course, which seems to be growing nicely because that's basically all the assets that remain after operating activities minus the capital expenditure. So it's basically money that can be used for other things that can be accumulated. That's very nice to see growing is one of the most important things that I look at personally. And we will also take a little bit of a look at the analysis tab and examine some of the key elements here. So some of the things that stroke me like immediately and looked very nice is the debt to equity ratio is very low, 0.14. That's very nice to see. They don't owe a lot of money. And the book value per share compared to the industry book value per share is very high, which indicates that the company is undervalued. So the company stock basically is undervalued compared to the industry at least. And for a company like Alibaba to be undervalued right now, it's potentially a pretty interesting opportunity to at least take a look at. And so yeah, you can always take a look at the price to cash flow ratio, for example, and compare it to the industry. Yes, see how expensive it is based on the cash flow. I think you can do all sorts of things really and compare the company to the industry. The P ratio is basically identical. But I do like taking a look, as I mentioned earlier, taking a look at the debt and also taking a look at the book value per share is also an interesting thing to me because if I know that the company has a lot of assets and it's cheap based on those assets compared to the industry, of course, then that's a very interesting thing to me. And as long as they're making money as well, I'm golden personally. So what would I do with Alibaba? Would I buy? Would I sell? Would I wait on it and see what happens? I would actually buy Alibaba. I would probably buy Alibaba right now, and I may think about it actually. I think that there could potentially be a little bit of a drop down still, just because we're approaching the values of. I think this was the IPO. Sorry, not over here. Sorry, the IPO I remember was like 98 or something, right? No, it went down to 86 at some point. So I think it may even go down a little bit. So this is the 5-year chart. So I think it may actually approach 100. May approach 100. But regardless of that, I think the current value is actually very promising. Like I like it a lot. And so unless there is not a tumble in the markets in general, I think this is destined to go up personally. So I would definitely buy myself. Again, it's all on you, of course. I mean, I don't solicit any purchases, of course. We're just discussing about the stock here and sort of like in an entertainment fashion, and we're looking at the financials. But it comes down to your decision, obviously. Regardless, thank you for watching. Hope you enjoyed the video and hope you're gonna be having an awesome week. Bye bye, guys. See ya.